You think you make financial decisions with logic? You don't. You make them with math, whether you know it or not. And today, I'm going to show you the exact mathematical formula that can transform how you invest, save, and build wealth. By the end of this video, you'll understand expected value, the single most powerful concept in decision-making. You'll learn how to calculate it in under 30 seconds, and you'll see exactly how top investors use probability to shape their financial future. Stick around. The third example will change how you think about risk. Let's start with the basics. Expected value is a mathematical concept that tells you what a decision is actually worth, on average, over time. It's not about what happens once. It's about what happens if you made the same choice 100 times. Here's a simple example. I offer you a bet. Flip a coin. Heads, you win $100. Tails, you win nothing. But you have to pay $40 to play. Should you take it? Let's calculate. Your expected value is $50. You're paying $40. That means, on average, you profit $10 every time you play. This is a positive EV decision. Always take it. Now let's scale this up. Real life isn't about coin flips. It's about career choices, investments, and business ventures. But the math is identical. You just need better data. Example 1. Should you invest $20,000 in a certification course? Data shows 70% of graduates earn $10,000 more per year. 30% see no change. Let's calculate the first-year expected value. Your expected value is $7,000 in year 1. By year 3, you've tripled your investment. This is why data-driven education decisions beat emotional ones every single time. Quick pause. If you're still watching, you're already ahead of 90% of people, because what's coming next is how investors use this to build wealth. And the third example? It's about a decision you'll make this week. Example 2. You're considering a $5,000 stock investment. Historical data shows 60% chance of 20% gain, 40% chance of 10% loss. What's the expected value? Positive $400 expected value. This doesn't mean you'll win every time. It means over 100 similar investments, you'd profit. This is how professional investors think. In probabilities, not certainties. But here's what most people miss. Expected value alone isn't enough. You need to factor in your risk tolerance. Can you afford to lose $500 if the 40% scenario happens? If not, the math changes. Example 3. You're thinking of starting a side business. Cost? $3,000. Market research shows 50% chance of $8,000 revenue, 50% chance of $500 revenue. Expected value? $4,250 expected value on a $3,000 investment, positive EV. But can you handle losing $2,500 if it fails? If yes, proceed. If no, wait. Math tells you what to do. Your situation tells you when. Now, let's make this practical. You don't need to calculate this manually every time. Here's a simple Google Sheets formula you can use for any decision. Plug in your numbers. Get instant expected value. Save this sheet. Use it for every major financial decision. I'll link a free template in the description. Want to go pro? Investors use Monte Carlo simulations. This runs your decision through thousands of random scenarios to show you the full range of possible outcomes. It's expected value on steroids. 3 mistakes people make. First, using gut feelings instead of data. Second, ignoring small probabilities that add up. Third, not updating their probabilities as new information arrives. Avoid these, and you're already ahead. Here's your action plan. Step 1, identify the decision. Step 2, list all possible outcomes. Step 3, assign probabilities based on data, not guesses. Step 4, calculate expected value. Step 5, factor in your risk tolerance. Then, decide. This week, you'll face at least one financial decision. A purchase, an investment, a career move. Use this framework. Write down the numbers. Calculate the expected value. You'll make better choices. I guarantee it. You now have a tool that top investors, entrepreneurs, and decision makers use daily. Expected value isn't just math. It's a lens that turns uncertainty into clarity. use it wisely. If this video helped you, hit subscribe. Next week, I'm breaking down Monte Carlo simulations step by step, how to run them yourself and use them for investment decisions. You won't want to miss it. Drop a comment below. What's one financial decision you're facing this week? I'll help you calculate the expected value. Thanks for watching. I'll see you in the next one.